Shares of EV maker Rivian are rising after the company posted a smaller than expected third quarter loss and a small beat on the top line. CBC's Phil LeBeau joins us now, along with a special guest. Good morning, Phil.
Good morning, Andrew. Let's bring in RJ Scaringe, founder and CEO of Rivian. Well, you heard what Andrew had to say there, RJ. Better than expected results in Q3. You raised guidance for Q4. A lot of that is because you've improved your execution. But how much of that is also a reflection of the fact that the demand that you're seeing for your vehicles is not softening at all?
I mean, we continue to see a tremendous amount of excitement for our products, and ultimately, we think the manifestation of the product features, the product design, coupled with the positioning and the branding that we built around the business, around the products, that's really connected with customers and resonating extremely well.
Yeah, but you know the chatter that's out there right now, RJ. There's a lot of hand-wringing in the market that EV sales growth is slowing down. It won't be growing as quickly. Where are most of your buyers coming from right now? Are they coming from previously owning an EV? Are they coming from internal combustion engine models?
Okay.
Good morning, ladies and gentlemen. What is up?
Is going to join us for a market conversation you don't want to miss. He will be here at the
How
table.
is everyone doing today?
This is CNBC.
Okay, we got it. Not too shabby, not too shabby. All right, so right now I'm setting up my charts, seeing, marking some levels. Today we have two Fed speakers speaking today. We have Jerome Powell and and Weller speaking today, so that should cause the market to give us some pretty decent movement. So we just gotta see, you know, the direction. Still holding below the lows of yesterday. So let's see what type of action we get today. Da, 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 da. All right. Not too bad, man. Not too bad. Let's see. What time is this? 5:30.
Welcome back to Squawk Box. I want to talk more about the markets and bring in our next guest. He's here to discuss the venture capital environment, AI, the IPO market, and so much more, including your ideas about investing in America, which I want to talk about. Brad Gerstner is here. He's the founder and CEO of Altimeter Capital, a private tech investment firm. He's made investments in Snowflake, ByteDance, Okta, Epic Games, Orbitz, and so many others. So where are we, sir?
So let's
What to
see.
be here. It's nice to see you. But what do you think is really
Jerome
happening in this
Powell
market?
is
Where do you think interest
speaking
rates are going? What's the risk on
in
risk off?
37
Well,
minutes.
you know,
So
we've been through a
in
pretty
37
epic
minutes,
journey over the
Jerome
last 3
Powell
years.
will be speaking.
I think I said about 18
After
months ago
that,
the new normal is going to look a lot
in
more
5
like the old
hours
normal,
and
faster
22
than we think.
minutes,
But we have to get through
we
this
have
process of
Fed
adjustment.
Weller,
What is the old normal? So if you think about
Fed
the
Barr,
period of
and
time
Fed
for
Jefferson. So we
2010 through
have 1,
2020,
2, 3,
we're roughly at
4
2.8 on the
Feds
10-year.
speaking
I think we're going
today.
back to a period
So
of 3
this
to
is
4 on the
going to
10-year,
be
a
a
highly
very
investable
interesting
period. What
morning,
people
to say
can't
the
deal
least.
with is the volatility, right? Just think about this. In the last 6 or 7 weeks since July, we have a 25% move in the 10-year, right? And so the NASDAQ is down 12% during this period of time. And then, of course, we've had this run over the course of the last 8 days. That's the process of normalization, as people try to get their arms around where is the 10-year going to settle out. I look at inflation, the PCE over the course of the last 4 months is annualizing at something
Thank you,
like
man. Thank you. Happy to be back.
2.5%. We think by summer of next year,
In
you'll have
any
a
place at the
two-handle on
moment.
inflation.
At the moment, I'm not in any place. I am looking to short ES. So I am looking to short ES, given that, you know, again, topping out. We had nice rejections here at the 4402. So I'm looking for a potential break of 4388, and then a break of the 50 EMA, and then a possible lower high to short. I wouldn't mind scaling in here, to be honest, and risking to the high of the day, or maybe 4405. So when I scale in today, I'm going to start off with the micros, and then once I have confirmation, add a mini or two. The fact that, you know, we have 4 Feds speaking this morning, I'm going to be very, very cautious. I don't necessarily want to jump the gun, and usually when we have Fed speaking, the market tends to go a little haywire, a lot of back and forth and choppiness. So gonna be cautious today, play it safe, and just see what opportunities we can get after the Feds speak.
The fact of the matter is, Joe, as you remember, we did great between 2001 and 2007 with a much higher rate environment. But what we need is we need predictability. And what we haven't had the last 3 years is predictability. And, you know, listen, we beat a pandemic. In March of 2000, when I came, or 2020, when I came on, we didn't know if this was Ebola.
Yeah.
Right? And so the Fed went all in, Congress went all in. That was the right thing to do. But by the summer of 21, when the Fed was saying they don't see inflation, that was clearly a mistake. The cost of a cargo container from China had gone up 10x. So we waited 6 months too long. And the consequence of that is we had to go a lot higher. But if you look at the Fed's own forecasts for next year, 1.5% GDP, 2 to 3 rate cuts, ending the year with a two handle on inflation. To me, the thing that people have been most mispositioned for is that the world may in fact go back to, to this normal. For us, our net exposure today is 60%. Like I said, we started the year at 93. So yeah, we've taken some risk off the table as prices have gone up, but we're still leaning forward and still bullish on America.
What do you like? We spend a lot of time talking about AI right now. Is that where the opportunity lies? Where is it?
So, when we entered the year, one of the things we said is not all tech is created equal. Remember, tech went through a recession in 2022, right? A year ago. Everybody crowded into the same trades. The safety trades of bonds, the safety trades of cyclicals, et cetera. We've seen a reversion to the mean. Think about this. The SPY, the S&P is up 15% this year.
Right.
If you take tech out, it's down 2%. Okay? The Russell 2000 is down this year. I think that's a healthy correction from where we were last year, where X-Tech was overvalued as a safety trade. Tech, the best parts of tech have moved up. If you're a COVID pretender, you haven't gone up this year. I see some names floating across the screen this morning.
Who's a COVID pretender in your mind?
Well, I see a name this morning like Upstart, as an example. Nothing against the company, provide car loans, and car financing to folks, but they pulled forward massive demand during COVID, and now the give back comes. But if you look at a company like Uber, who you did a great interview with Dara yesterday, or a company like Meta, they've seen expanding margins this year and reacceleration on the top line. I wrote a letter last year about time to get fit.
Right.
Andrew, Mark Zuckerberg in March wrote the year of efficiency. And Dara told you yesterday,
this morning,
quarter over quarter, we've actually reduced headcount again.
Right.
We have this massive bottom line opportunity in all these businesses because of AI. Margins are expanding.
I'm just looking, Robinhood is running across the street a lot too. Is that a pretender company because there were so many people who were home betting on the markets who aren't now?
Pretender may be a little harsh.
Well,
You're right. What I mean by that is we pulled forward.
really would like to see if this is going to be the start of a nice
that was
unwind.
not sustainable in a world. I mean, I look out the window here. People are back to work. They have to take Ubers to get back to work. They're not sitting in their homes
Good
doing
morning.
the things they were doing during
Yes,
COVID.
not in anything
And one
yet,
of those
but
things was day
I
trading
am
music, right?
strongly
And so that was
debating
just the give back.
possibly
But it's
entering
incumbent upon
short
those companies to adjust.
on
It's
ES.
hard to adjust. Nobody
Start scaling
on
in
this
with the
set wanted a
micro.
pandemic in
Let's
March
take
of
a look
2000
at
or 2020, but that's the hand we were
Tesla.
dealt.
Tesla seemed to have topped out.
An initiative, I should say, called Invest
Possible
America. Tell
pullback
everybody about it.
down
Talk a
to
little bit about it. Actually, it's been
215.
proven out already.
Yes. So, I mean, you just had
Nvidia
Representative
as
Canada
well.
this morning, and one of the
Ooh,
things he
this
said that
is
caught my attention was
nice.
we've never been more divided.
My goodness,
99%
Apple.
versus the 1%, right? A real threat to
Meta.
democracy. I think we have a
Everything's
historical
looking like it's
right
topped
now
out on
to
the
get
1 hour time
everybody
frame.
into
So
the game of capitalism.
yeah,
So the idea is
I
very
may
simple.
enter a
This
short
is a
on
bipartisan
ES,
piece
but
of
I'll start off with the
legislation we have
micro
introduced in the spring
prior to
that
the
would
market
cause the Treasury
open.
to create a
It's looking like we're
$1,000
just gonna
seed
have a nice
investment account
retracement at
for
the
every
open.
child born in America.
And again,
There are
Powell is
3.7
speaking.
million kids born every year in America. If we just put $1,000 in the S&P 500, it's only 3.7 billion, less than 1/100th of 1% of the national budget, less than the cost of a single weapon system, right? The incremental budget we're looking for in Ukraine would pay for this for 50 million kids and 15 years, right?
Take it out of the IRS stuff.
And this gets every single kid into the game.
Right.
And if you look at the power of compounding, right? We talk about financial literacy. We talk about less than 50% of people under the age of 40 believe in capitalism.
Look, I will tell you,
bad.
Japan's doing something similar, not outright paying for every kid that comes through, but offering massive tax incentives for every individual to be able to do stuff like this alone.
What we don't want is another big government entitlement program. What we want to do is empower individuals. The federal government can seed it, get it
It's
going.
closed.
They open up their Invest America account on their phone. They see they have at 10 years old, you'll have $12,000 in that account. You see that you own a little bit of Tesla, of Microsoft, of United Healthcare.
Right.
And now we have a dialogue with them because they're in the game. They have skin in the game. We tackle this problem of hopelessness that we have in this
So
country
how does
by
your-
giving people.
How does your program? I'm going to.
Yes.
I'm very interested in the program because many years ago, I remember having a long conversation actually with Bill Ackman, who we had on this program, and he had sort of developed an idea around a program called a birthright.
Right.
It was about $6,700
Yes.
per person, with the idea being that actually every person, by the time I think you're 62, retirement, you'd be a millionaire.
Correct.
Because it was about $6,200 compounded
Yep.
over time. This is obviously less money, but he also had these ideas around how you do it so that you couldn't actually ever sell out till 62. You had to own it in various mutual funds, could not own individual stocks. It was sort of a whole. So how would this
So
So there have been, I would say, over the
patiently
course of the last 40
waiting.
years, a lot of good initiatives, a lot of good thinking on this.
So if you guys have any
They've all
questions,
failed
feel
for
free to
certain
ask.
reasons. Baby bonds, Senator Cory Booker, has an idea to give certain kids bonds. The problem with the bond is it doesn't appreciate. You don't learn about capitalism. You don't actually own your slice of these companies. It doesn't benefit from compounding. The
14K.
challenge with Bill's idea, and by the way, I like a lot of it. The challenge with we can't afford it. Right? We have a $34 trillion debt in this country. We have a $2 trillion national deficit. So the difference is I just want the federal government to seed it and get out of the way. Use the power. Think of this, a 401k from birth. So I was with Dara. I said, Dara, if we set this up, will you match it for all the kids of your drivers and employees? Right? So
Really?
you add
You're switching to take profit? How
$750,
come?
that year the child is born. And he said, absolutely. I've talked with CEOs across the board on this. So we're putting together a CEO council.
They don't
I
have.
talked with Satya about it earlier in the week. Michael Dell.
Nope,
about it.
they don't. Here's the thing. They don't have limits to withdrawals. That's correct. But they have a lower drawdown threshold than Apex.
20 years ago, Harold tells me, called Baby
For example,
Bill.
on
Remember that? It's just
Vaguely, but I'm a big fan of it.
they have like a daily. So they have a daily drawdown and then they have an overall drawdown. So a bit tricky.
When I look at the past failures, the biggest failure is that they were looking for some
But yep,
tie-in to
the
Social Security, some
ability to
offset
be
Social
able to
Security. I think they should
withdraw
focus on Social
daily
Security. It's a
is
totally
enticing.
separate program. This is completely different.
if it gets people back to realizing that socialism has been tried, because I think it's 60% of college kids aren't sure.
This is a program. Ray Dalio is spot on. The rise and fall of nations occur when you have a wealth gap that grows, when you have people who lose faith in the system. Pew and Gallup are telling us people are losing faith in the system. But we're not agentless. We can do something about this. So the great thing is from
And my question would be, have you gotten a payout from Apex? Apex has taught me the pain and I will.
So first, I was presenting at a.
Take it out of that IRS.
Discipline with them. Okay.
So
80,000 more
All right.
agents for 10 billion.
I have to say that when I think about the bills in front of the House and the Senate right now, $100 billion of incremental investment being talked about to fund two wars, right? In Ukraine and the Middle East. We've already spent
One
$100
second.
billion in Ukraine. This is not a question. Meta's saying we got
All right.
your efficiency, flatter is faster, leaner is better. The federal government needs to get fit and needs to get the deficit down and get back to 2019 spending levels. And when we do that, we need to set national priorities, okay? And one of those national priorities needs to be bringing every child in America into the game of compounding and capitalism. If we don't, it threatens the very roots of capitalism.
Look, the practical problem with this is going to be small businesses will say, wait a second, you're investing in just big companies. It's going to make the big company stocks even more effective and efficient. I believe in this. I don't, got accounts for my kids where we do an S&P 500 so that they can see some of these going through it. But the practicality of getting this through and getting all sides, it's not just the discussion we're already having here. It's the government picking winners and losers.
As Bill Clinton said to me, S&P 500 is good enough for America and every other index are good enough for this program.
I'm not arguing against it.
Right.
I'm just saying that will be yet
Sure.
another
Sure.
hurdle.
I'm ready for the fight, and we've got great people leading this initiative. We've got great authors and co-sponsors coming together. It's just common sense. And I've started 4 companies, Andrew. And the first thing you look for as an entrepreneur is product market fit. Because the fact of the matter is, you may love the idea, but if you can't explain it in 30 seconds to somebody and they smile and they get on board, it's not going to work.
The product.
This has one of the highest product market fits of any idea I've had in 25 years. I think we can get it done.
We look forward to following your progress, sir.
Thank you.
For being here this morning.
Thank you for having me.
I like the lessons that it teaches.
Yep.
I do.
No, I think it could have a huge impact.
Yeah.
Huge impact.
Well, it is pretty astonishing to me that Trump's folks are on board, and Bill Clinton said, I want to be your personal advisor to get this through. Like, where is there something else where this can happen? Right? So and the key, I was with Kevin McCarthy in his office for an hour, before this summer. And Kevin said, I'm talking through it, and he said, this is a great idea. We got to make this happen. And now every Republican is against any new spending.
Right.
And I said, yeah, we need, he's like, says to his chief of staff, find me $10 billion. And he looks at me and said, how much was it again? I said, Kevin, 3.7 million kids, $1,000 is $3.7 billion.
Right.
He said, shit, we can pay for that 100 times over
Did he
with the IRS.
actually say?
With the IRS. That's what he said.
Yeah, he did. I think he's on.
But, thank you guys for giving me the opportunity to talk about it.
Great to have you this
And
morning.
Dara really is a CEO council.
Don't leave yet.
We're still on.
Cameras are still rolling. Did you think? Did you know? You didn't know the
Hands down.
You were about that tapper just now.
That would have been a Gordon Bethune moment.
If you really didn't think we're on, you could do a lot better than yes. I mean, that's just.
We're still on TV.
Let it fly.
Okay, folks. Brad, thank you very, very much. When we come back on the other side of this, top stocks moving ahead of the opening bell on Wall Street. Stay tuned. You're watching Squawk Box, and this, yes, is CNBC.
Lennox.com.
All right, just over a half hour to go until the opening bell on Wall Street. Dominic Chu has been checking out everything that's moving in the pre-market. You want to get us up to speed on what's happening, Dom?
We got a handful of these earnings movers, Becky, to your point here, getting attention because of those earnings reports. Biogen is one of those. It's been moving between gains and losses. It's up about 0.25% right now, just around 7,000 shares of volume. The biotech company behind key drug franchises tied to treating cancer, multiple sclerosis, Alzheimer's, amongst other things, reported better than expected profits and revenues, but did cut its full-year profit forecast due in part to higher merger and acquisition-related costs. So those shares in focus right now. A couple of consumer-related earnings headliners as well. Under Armour right now up nearly 2%, just around 200,000 shares of volume for its voting class of stock. This is after the athletic apparel and footwear maker reported better than expected profits on revenues that were in line with expectations. It also affirmed its full-year profit forecast. Under Armour was helped by growth in apparel.
I'm waiting.
revenue,
I
which
got out
helped
of
offset a drop in
ZL, slight
footwear.
little,
Profit margins did
slight
also
little profit,
improve, in part
but
to
I'm
lower
looking
freight
to
costs.
re-enter
And on
ZL
Ralph Lauren
at
upscale side of
49
things,
even.
that retailer's been moving between gains and losses, but right now currently up about 2% after it reported better
I
than
don't get
expected
it.
profits
It's
and
all
revenues.
good.
Ralph
And
Lauren was
then-
helped by sales growth in Europe and Asia that helped offset modest declines in North
And
America.
looking
but it also
for
did
looking to
forecast
short
current
the
quarter
markets,
holiday quarter
ES,
revenues
Nasdaq.
that were below some
Just
analyst
waiting to
estimates,
see what
citing a more
happens
cautious
once
environment around
Jerome
wholesale
Powell
demand,
starts
Becky. So
speaking.
those
So we
consumer
have
names kind of at least
we
throwing out
have
mixed pictures.
four
with regard
Fed
to what the
speaking
holiday
this
season
today.
Yeah,
First
got a
one
lot to
Jerome
dig through before
Powell,
we get to the
then
holidays, Dom.
Weller,
Thank you.
then
We'll see
Barr,
you a
and
little
then
later.
Jefferson. But obviously
It is
Powell is
recent
the
with
most
the
important
culinary
out of all of
union in
them.
Las Vegas now says a tentative agreement has been reached with Caesars Entertainment for a 5-year contract that would cover approximately 10,000 hospitality workers and avoid a strike at 9 Caesars properties in Las Vegas.
Yeah, I'm gonna be trading
is,
the
strike threat
micros myself because I just don't trust, how we could probably have like some massive movements. So
We are going to get a final check on the markets right now.
Yeah, I'll
Again,
be
we've been
focusing
watching all
on
morning, and
MES,
after 8 days in a
MNQ.
row of gains for the NASDAQ, its longest winning streak since 2 years ago, you're going to see some modest advances this morning. NASDAQ up by about 10 points, Dow futures up by about 40 points, the S&P futures up by 4. Treasury yields have been under where we're used to seeing them recently. 10-year is well below 4.6% to 4.56. The 2-year is even below 5%, and we're continuing to keep an eye on that. Oil prices this morning hit a low of $75.86. That's its lowest level since
37
July of
days.
21st. There have been concerns about what's happening with demand around the world. You can see WTI down by about 57 cents. I think demand in China was one of the big concerns off some economic numbers. WTI also settled below its 200-day moving average yesterday for the first time since July. Folks, we're going to wrap things up right now. It's been a fun morning. We've been glad you've been here with us. We'll see you right back here tomorrow. Right now, it's time for Squawk on the Street.
Oh yeah, what's on the menu? I gotta make some.
Good Wednesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber at Post 9 of the New York Stock Exchange. Futures steady here. The Dow up 7 days in a row. Longest streak since July. Another wave of earnings and Fed speak today, including Fed Chair Powell this hour. Oil approaching 75, lowest since June. Our roadmap begins with stocks trying to build on this rally. S&P and NASDAQ are riding their longest daily win streaks since 2021.
Speaking of rallies, Microsoft shares closing at another record high. That follows fresh optimism about growth from a key partner in its efforts in AI. And we're continuing to keep an eye on the housing sector. Mortgage rates are retreating. In fact, they posted their biggest one-week drop in over a year.
Speaking of which, let's get to the markets extending their win streak. Jim, a lot of that's going to circulate around a 30-year back to 7.6.
Yeah, well, that allows you to be able to buy a lot of things. I mean, that's what happened yesterday. It was a Datadog rally. Datadog actually said something that was really key, which is said the optimization is declining. Okay, that's all enterprise software speak, but basically said there was a lull in orders. Orders are back. That reverberated everybody from ServiceNow to Salesforce to Amazon,
Microsoft,
to Alphabet, and to Microsoft. And, so you got this little Datadog, a $33 billion company. I know that used in the old days, David, that was big. Right. But what they're saying is there had been a problem, and we knew there was a problem with enterprise software, with DevSecOps, so to speak. That's not Black Ops, that's DevSecOps. And that apparently is over, and that's allowing a lot of companies to breathe, because that had been the theme of the quarter until yesterday.
See, we can take that much of a narrative from Datadog?
Okay, so that's really important. That's where the bonds come in. If the bonds weren't going the way of the bulls,
Yep.
I think it would have been no pin action. We'd knock the one pin, nothing else
10
happened.
minutes.
But when you have the bonds going, people are willing to extrapolate all sorts of things. And that's what happened yesterday.
Right. So you had that momentum being created.
Yeah, the bonds allow you to dream.
And
You know,
allowed to dream.
some
If
people
she
dream
gets back
dreams
to
of just
acting right, it'll
Datadog.
be
I dream
smooth
dreams of
sailing.
bigger things. You do. Yes, I do. Datadog was downgraded by some sort of.
Mizuho today does cut to neutral. Yeah.
Yeah. Now, when I look at what you're cutting to neutral, a company that is at the absolute heart of a lot of both security and observability is the word that people use of your dashboard.
All right.
And there are a couple companies that do that, obviously. David, when we look at enterprise software, you and I both know that there's like a dozen
Yes,
companies ready to come public
popping.
right now, including Databricks, which is 43 billion. And these are all companies that do the same
10
thing, which is
minutes.
they allow you to
Give me
observe
1
how
minute,
AI
bro.
is doing within your organization. And I don't think there's anything more important right now. Even Apple right now, front and center, Morgan Stanley saying, don't worry about our AI.
Oh, you're
But
you're
when
long.
you look at
Okay,
Amazon Web
okay.
Services,
Be
Google
right
Cloud,
back.
which is trying to recover from a lot of bad publicity. TV ad market.
Right. He's, I said it and he said it, but you heard it from him as well, so now you can believe me. That was what started this decline. Now they, by
and
the
we
way,
have,
they said, listen, we're not saying our
was it
EBITDA is
the
going to be lower. It's just a function of where we
natural
are in
gas
the ad market.
report this morning
But, you know,
too.
there had been this expectation that by the end of next year, you get to as low as at least
Natural gas
three,
and
maybe even below
and
3
oil.
times. Yeah. And that's been an important part of the story.
What is
here,
it?
Because the lower you get the leverage, the more free cash flow, the more
yeah,
your interest payments decline.
wait.
Jim, and you have basically more money to do other things with, including perhaps being aggressive as some of the other parts of the industry really suffer. So a mixed quarter overall, not bad really. Well, free cash flow is strong now. By the
We
way,
got
we're not
initial
clear
jobs
the
claims
benefit of
tomorrow,
not
and
having to
then
pay for
Fed
content while the strikes were going
speaking.
on is also a key. So that will come back at some point in
ECB,
terms of actually
Fed
having
Chair
to spend
Powell
more.
speaking
But they do
tomorrow
have
again. Damn.
Disney only made what about 1.5 billion in free cash flow. So
Yeah, they really about to
And
do
the story
some shit.
here is the free is
absolutely.
cut,
Oh.
right? Optimize, efficiency, cut, get free cash flow up, retire as much debt as you can at a discount, which they have been doing, reduce your overall debt load, and have your leverage ratio come down. And so that's where investors have been very focused with Warner Bros. Discovery. You know, we talk about it a lot. Market cap wise, it's not that large, but they still got 40+ billion in debt.
well, this is
Down
something
from
that
where it was, but I want to check
you
that
had not
number.
had you've not had your John Malone interview yet, right?
No, that will be
Will
tomorrow.
this be really crucial? He can
Yes,
help us through
this will be an important part of it. Him discussing his view of what Mr. Zaslav has been doing at Warner Bros. Discovery, and what the future holds, not just for that company, but for the overall ecosystem of direct-to-consumer, the entertainment there, sports, and everything else. Tomorrow's going to be a good day. We got Malone, we got Maffei, Chris Winfrey's first interview. He's the CEO of Charter. He hasn't talked publicly since that they resolved that dispute with Disney that we talked a great deal about. That really did perhaps present a new template for how the distributors and the programmers are going to be working together. And then also Sirius rolling out a new, what are they rolling out, Carrie? A new format? What are we talking? What is it? That's Sirius. New branding. So, yeah, got that.
Okay.
Meantime, Barbie, $1.5 billion, highest grossing Warner movie ever, although studio revenue only up 3.
I know, and I think that one of the problems with the story is that you had these different items. I had this same problem with Mattel, Les Birkenstock. Like, well, how much impact did this movie have? And I think a lot of
1
people
minute
just
till
felt,
Fed starts
everybody
speaking.
benefited, but felt Mattel only got a quarter benefit. Here, there were other things that made it so that it didn't resonate as much. And then next thing you know, you have
See
a
what he's saying.
Mattel that is still down point quarter, and Warner Brothers, it seems like the comments in free fall. Yet the cash flow is what I was looking at. But obviously, yes. I mean, why not Warner? Look, this is a quarter where a lot of people said, look, things are choppy. I mean, I can go through. I've got Robinhood's choppy, although of course they won't admit it. The numbers are choppy. Upstart was choppy there. They came somewhat to admit it. I've got a lot of choppies.
Is he speaking for?
think
That
that
depends. Could be
We
30
obviously
minutes.
get to
Could
the
be
end
an
of the month
hour.
today, guys.
Choppy.
What are you expecting, Jim? Do you have an expectation there in terms
No,
of
but I know
Yes,
what
no,
I need
he's
to
supposed to start
which
speaking
is-
in a
I
minute.
need to see some
And
strategic
then
partnerships. And without strategic
in
partnerships,
4
that means
hours
4
and
hours, not
25
80,
minutes, we
so we're
have
79
Weller
until we
will
get what
speak.
Nelson Peltz wants to do.
right?
4 hours and
And I
45
think that
minutes,
that's what I worry
Fed
about.
Bar.
Strategic partnership will keep
And then
it.
7 hours and 30 minutes,
I don't know that you're going to get that
Fed
strategic
Jefferson.
partnership announcement. You're talking something like ESPN.
Yeah, well, then the stock goes to 80, okay? Where they do a dividend. I want a penny.
You may get some language around it. I just don't know that you're going to get an actual announcement of news specific to we're, joining with fill in the blank.
Then the stock doesn't go up. That stock needs that.
Yeah.
Otherwise, you're going to have the Perlmutter, the Peltz coalition wanting to put someone on. We had someone on yesterday saying, that was Jim Stewart, saying what it would mean to have somebody in the boardroom that could be disruptive. And I was in one of those situations. The guy was disruptive. Broke my heart. Come home every day and said, I can't believe how bad things are.
How about some of Kevin Meyer's comments about coming back and helping out to the degree that he can?
Yeah. Well, he's been involved. He and Staggs have both been involved. I mean, now Hugh Johnson has just come in, right? You had a real void there when Christine McCarthy left. And
Or
kinda
maybe
left.
the void was there when she was there.
Yeah, may have been. I think that's an argument that certainly some would make, but they need, he needed help,
Yeah.
and fast.
But I don't
He
think
did
Hugh
call on
Johnson's
two
going
of
to
the people.
That's not going to make Nelson Peltz like it more. I know that's a false narrative.
No, but that's an impressive hire, isn't it?
Oh, I think it's a very impressive hire. I think Hugh Johnson can go anywhere. People take him anywhere.
Yeah.
And he's a really good guy, and he's much less divisive. There was like a divisiveness about Disney.
Right.
Like, that's got to end, the divisiveness.
We'll be watching closely,
It was
guys.
like
I did
Mickey
want
versus Minnie.
the gross debt
Kramer
number
versus Kramer.
on Discovery is 45.3 billion. They ended with 2.4 billion in cash on hand, and again 4.2 times net leverage.
Then
Little
why is the
higher.
stock just getting
Little
crushed?
higher.
Is that one line about ad revenue?
Yeah, well, and not getting leverage down to where people want it.
All right.
Yeah, that's all it takes.
Barbie. Who made the money off of Barbie? Adam Aaron?
I never saw Barbie.
Jason Kelsey? Travis Kelsey? Jason Kelsey named people's name.
Roblox, Warby, Under Armour, Toast. In a moment.
Everyone we're going to get to.
Come on.
Don't underrate us.
Sing Ring of Fire.
New high for ES. 4404. Good thing about this is, okay, ES just made a new high. NASDAQ hasn't. Dow Jones has also made a new high, so some divergence. Okay. Do. Cancel this. Excuse me. Huh? Hell yeah. Been up since like 4 or 5. Went to the gym. Did back today. Then I'm gonna go back later this afternoon to do cardio. So. Yeah. Nice. Yo, where is this dude talking? Good morning, good morning. Yo. It's really good. Does anyone have the link to where Powell is speaking? Because they're not showing it on CNBC or Schwab. Let me see if Tech has it up. Thank you very much.
And so, you know, we've been having a great time. The highlight of the week so far for me is to hear all the funny stories that people are recounting. And I have to say, one of the biggest shocks for me was that
The biggest problem is inventory.
funny stories that I
We'll
never
have to
heard.
cut. That's his goal in everything.
I've worked with Phil
It's
for 26
confuse
years, and
cars.
I lunch with him almost every day. And apparently he's been holding out. So as much fun as Monday and Tuesday were, really excited about today's conference. We have 2 terrific papers. We have 2 panel sessions and a number of illustrious speakers. So I think it should be really good. Now, my main job here this morning is to introduce Chair Powell. So you're all already familiar with his many accomplishments, his superlative communication, and if you know him at all, his clever wit. But I actually want to call out how great it is to work for Jay. He is quick and genuine with his praise of the work that we do, and he's not shy about telling us if we've missed the mark, which is very important in a boss. But what truly endears him to the staff of RNS is that he really, really loves the nerdy details of the economy. He could be one of us. And so that's why we invited him to kick off our event today, even though if you look at the agenda, you will see he's the only one on the agenda who is never a member of RNS. But we made an exception and invited you to speak this morning, Jay. So without any more, I would like to welcome Chair Powell.
Thank you very much, Stacy, for your kind words and for the chance to be part of this wonderful celebration. Welcome to those who are here and also those listening remotely. It's great to be here honoring the Division of Research and Statistics today to celebrate the division's centennial. It's also humbling to see so many Fed people who served the institution over long and distinguished careers and have returned for this great occasion. Seeing some of you reminds me that the Fed is one of those places where you can work for a decade or so and still feel like a newbie. You know who you are. So for those listening outside the room, I'll just very briefly outline research and statistics jobs or responsibilities. A large part of the division, along with other divisions of the Board of Governors, engage in producing what is called the Teal Book, which contains the staff's forecast for the U.S. economy, as well as a great deal of data and analysis on financial and economic issues. The Teal Book is delivered to the Federal Open Market Committee, or FOMC, before our regular meetings. Outside of the FOMC meeting cycle, RNS deploys its experts wherever they're needed across the Board of Governors, providing crucial inputs to work on financial stability, bank merger analysis, and many other topics. RNS is also an ongoing source of specialized information for policymakers. If board members have questions about even the most arcane workings of some aspect of the economy, and trust me, we very often do have questions, they can send an email and in no time be sitting down with some of the best informed experts on that subject. Much of the time, these are RNS economists. For example, during the pandemic, when questions arose about how the computer chip shortage was affecting auto production, or how businesses were responding to the backlog at U.S. ports, RNS gave detailed briefings on these novel subjects. Among its other activities, the Board of Governors is one of the most productive economic research institutions, and a large share of that work takes place inside RNS, supporting our mission of promoting a healthy economy and a strong and stable financial system. I've talked about research, so let's talk about statistics. In addition to gathering data from many sources outside of the Federal Reserve, RNS is itself the source of some of the most important data on the economy and on the financial system. Our consumer credit data provide financial markets and the public with a vital indicator of the strength of household spending and balance sheets. Each month, the Industrial Production Report gives us insights into how well certain sectors of the economy, especially in the manufacturing realm, are operating. RNS is also responsible for the financial accounts of the United States, a quarterly compendium of assets, liabilities, and transactions for segments of the economy. And every 3 years, RNS produces the well-known Survey of Consumer Finances, a premier source of detail and insights about how households are faring in the economy. The latest survey was published just last month. These and other data series produced by RNS amount to a significant public service. So I want to now focus in a little more detail on the U.S. economic forecast, which I would say is perhaps the most important of RNS's roles. And it's the aspect of RNS's work with which I most frequently engage. I think it's not an exaggeration to say that the U.S. economy baseline forecast produced by RNS, along with the simulations of half a dozen plausible alternative paths for the economy, constitute the largest part of the essential bedrock that enables our pursuit of our dual mandate goals. Now, some people are just attracted to extremely challenging tasks, and the people of RNS are manifestly those people, having chosen just such a task in forecasting the path of the U.S. economy 8 times a year for FOMC meetings and then regular updates between meetings. They do this work on the biggest stage and with the highest stakes of any forecasters, knowing that the economy so very often surprises us. I've observed several qualities that are required to do this work well and that our RNS colleagues exemplify. And I'll start with intense commitment to the work, which requires pretty much, as I see it, everything you have to give. I think you have to love this work of forecasting to do it well. The job also requires integrity. Policymakers count on RNS to give us their best thinking, not shading the results for any reason. Regular forecasting also demands a systematic approach and a high degree of intellectual rigor. Ask Stacy and her colleagues to explain a certain aspect of the forecast. You'll find they have a clear explanation grounded in a rigorous framework. Of course, that intellectual rigor has to be combined with flexibility and agility. Economic models do a reasonably good job of capturing the working of the economy over past decades. Of course, even with state-of-the-art models and even in relatively calm times, the economy frequently surprises us. But our economy is flexible and dynamic and is subject at times to unpredictable shocks, like a global financial crisis or a pandemic. At those times, forecasters have to think outside of the models. A dominant aspect of the future path of the economy is high uncertainty. That's so. This work also takes large doses of both courage and humility. And finally, judgment. To complement this rigorous process and these qualities, there has to be good judgment based on knowledge and experience. So, to wrap up, perhaps the most important legacy of the past century for the Division of Research and Statistics is the resilience, the creativity, the energy, the rigor, and the commitment with which RNS has risen to the many challenges that it has faced and that this nation has faced in that long span of history. So, on behalf of the board and the FOMC, thank you for that, and hearty congratulations on your first 100 years of service to the public. Thank you.
Okay. Less than a minute to go. Less than a minute to go. Yes, sir. That's it. Might I bring everyone else on? It's gonna be interesting. All right, 30 seconds to go. Come on.
Good morning, everyone. It's good to see you all. I am delighted and honored to be moderating this first panel today. I want to begin by thanking the Division of Research and Statistics, or put better, thanking the people of the Division of Research and Statistics. Here at RNS, and I will add in monetary affairs, I learned skills and perspectives that have been invaluable in everything I've done in my life since. I learned, of course, how to analyze economic conditions systematically.
Okay.
I learned how to write about economic conditions and analysis. I learned how to work as part of a team of people. I learned the importance of a commitment to excellence in one's work. And I learned about the immense rewards of public service. So as I look back on my own time in RNS at the board, I am so grateful to my managers, a number of whom are here today, to my colleagues, many of whom are here today, and to everyone who helped to mentor me and helped me in my path in this work. And while I was here and learned all these professional skills, but also made many wonderful, wonderful friends. I think a few pictures of those occasions have flashed by before. And these friends have been friends for life as well. So a huge thank you from me to RNS. And that's all my introduction. Now we're going to turn to the topics for this first session. We have three authors next to me here, and you can read it out in the brochure. They're going to tell us about the role of RNS in research over the past 100 years. I'm turning things over right to them.
Once again, make a run at 4,400, which is some year-end targets around the street.
Yeah. Today.
Thanks. It is great to be
NASDAQ
here.
is pulling.
Wow. It's just so good to see so many people, and happy birthday, RNS. This is a big event. It's my pleasure to be
Super. I'll take them for
Ooh, Dow Jones ripping.
That's a choice. That's a go-to. Don't Frisco's Rockefeller Center.
So this
for my
paper
wife's
is
birthday, we're going there, and then we're going to Saturday Night Live.
Yes, you are.
And I just got to tell you, man, I'm gold. This was the first birthday present I've done where she didn't say, "Oh, thank you." Good.
Dow pushing.
Because I have that. You put that for me.
So seeing some divergence, the Dow's making new highs. So is ES. But NASDAQ is lagging.
I'm looking at things that are moving.
All right, talk to me. I think that this Apple negative falls
New
remind me
high
of
on
let's say you get something wrong.
ES.
Take your heels in and continue to say, hold it, the max, you can't get it. And by the way, the max, it took me 2 days to get. I don't know where these guys are getting it. Or you can just say, you know, the
He ain't saying nothing.
order filled.
Okay.
Is one that resonates.
Limit order on ES at 44.05 has been filled.
Just for the record, is to have affinity AI. Let's say you went to you're on fantasy and you have a lot of players whose names you can't type in. Well, like, you know, you just type the first 3 letters. It comes in, and Tim Cook, who's the CEO?
Yep, I'm short. I'm short at 44.05.
You were making fun on Twitter today about those who told you to sell at 171. I think he's 65.
Not because I'm a mean, horrible guy.
Stop will be 44.10. 44.10. Stop. Loss. TP 43.90. Okay.
It's quite a rebound.
Okay.
Yeah, it actually surpassed the October highs.
Well, people don't understand. It was about the service revenue being bigger than the iMac and bigger than the Mac, bigger than the wearables, bigger than the iPad altogether.
Okay, Dow's reversing.
They don't care about that. These are the same people that don't understand. A lot of people in the Philippines and Indonesia, and they're taking it in Brazil, and Turkey, and Mexico, Canada. These are all countries where you're setting records. They act as if the only record that matters is China, which, by the way, they took share from Huawei, even though the government's supposed to be saying, let's not own it. Meanwhile, the government's letting 1,000 flowers. I wonder if they don't let this as a sign, David, as a token of goodwill. Why? Maybe this is the time that Broadcom gets the high sign on VMware. What a great way to be able to show that the PRC is on the team.
It's true. I don't know that they're on the team, but I guess ahead of the meeting,
They're going to San Francisco.
they're going to San Francisco. There are expectations that Broadcom will finally get the approval from the antitrust authorities in China to complete its deal to acquire VMware. This is an interesting situation in that you made an election as an investor a couple of weeks ago already.
Yeah.
Deciding how much cash and stock you wanted or what, and you're stuck. Just stuck. Probably going to be until the 26th when the agreement at least expires. So it's kind
take a look at
Into the
Tesla.
people unhappy who are wondering
Tesla,
what
nice
really
little
is going on.
pullback.
Is it bureaucratic, the way that Hot 10 would like people to believe, or is it political, the way everybody else seems to believe?
Well, I mean, Hoptan, who has rarely been wrong, did insist to me that this is that he's not appointed some sort of big deal.
Might be another slow morning.
Right.
I think the deal gets done because I believe it. But these people over there are unhappy.
Just on a damn tear.
Like, go take some Xanax or something.
Okay, that was pulling.
Half a planet, I don't want to overdose.
I think the expectation still is they are going to complete the transaction. It's just
I agree with that.
not on the timeline they had originally hoped for.
And then another one that Carl is sneaky on.
Tell me.
Ahead of when they reported NVIDIA, it's kind of back. And the word, of course, with NVIDIA was, indeed, if they don't get China.
Yo, you really do, man. She be playing.
Just the fact that the Chinese market is so large. But I keep hearing the same thing, which is the China flowback. Anything you couldn't sell to China, you can literally mark up and send. It's kind of like when you see like the Bath and Body Works. But no, I shouldn't say it. Let's use Bed Bath, although they changed their name. That's what confused me. When they're in a tanker or
Yep, NG rejection right off yesterday's high.
Is that why NVIDIA always responds to these curves by saying
Need to see ES get back under 4,400. So FYI, I'm in at 44.05. There we go, up 3 points right now.
I think those companies would take every single one. And every single
Just looking for
take two interactive.
43.90.
Coming out
If I get 43.90, I'll definitely call it a day.
latest and greatest with NVIDIA, which is very hard to tell between greatest reality. And remember, it's not computer generated.
Yeah, buddy. Nice, good stuff.
That's not.
What is it?
Nice trade on Tesla, huh?
It's done by number system. When I was talking to myself,
Not sure I understand the difference.
Did you do a weekly? Was it a weekly or a monthly?
it's not yourself, you think it is yourself. It's kind of like those fundamentals.
Okay. Oz. Goes with O's.
Oz was the guy who lost in the Senate
Tesla's
race
still
in
dropping.
Pennsylvania.
Oh, it's O's?
Oh.
Medalist is O's.
Yeah,
I didn't know that.
O's.
That's why it's such an
Oh,
amazing
go.
show.
Yep, let's go. Beautiful.
the fun is just trying to
Ooh, come on. We could possibly see 215 on Tesla this morning. So
It's just, look, if it was
Need to be a coach.
Nasdaq should. There we go. Nasdaq should be pulling. There you go.
the numbers of the show.
Drop it like it's hot, baby.
Take two to Roblox,
why
booking speed.
I'm taking a short on Nasdaq.
That's going to take you back to July.
You know, okay, now I often make fun of people by saying they're nice, because that's my grandma, Nana Lily, told me to do it that way. In reality, Dave Bazuki really is nice.
Okay,
And this
it's Friday.
was, for those who know him, yes. Because
Alright.
kids who use Roblox, it's either they use Roblox or they're like,
Ooh,
you know,
yes.
they're on like Fortnite
NG,
shooting
come on,
games.
baby. Get back over
And this is good. This
320.
is the gentler, kindler. Robert Kindler is one of your guys. He's a guest here. That's why it's in my head. Kindler.
Yeah.
Oh, I thought it was Kindler. Okay, but this was a terrific quarter from David, and I salute him. What's he on? How many shows is he on today? Is he on the 10, the 11, the 12, and the 1?
I think we cut it back to just 2 appearances.
Really? Wow, look at that move. He had a great quarter. Everyone wants their product to win. Dude, I don't think this shooter games is as much as dig them, so to speak.
Guys, I wanted to briefly mention a company we rarely talk about, in part because it's European, Bayer. I like to say Bayer, but really everybody else says Bayer. The German giant that bought Monsanto a number of years ago. One of the deals of all time.
Right.
But the press release caught my eye this morning. It wasn't a great quarter. You have a relatively new CEO in there. He joined, basically joined in June. Here's the quote that caught my eye. We're not happy with this year's performance. Nearly 50 billion euros in revenue, but zero cash flow. Zero is simply not acceptable. And then they go on to say, hey, you know what? We might separate consumer health and crop. That's
Sold
crop
to
science, not
Halion.
crop science, crop science.
Kenvue, now
we
there's.
we may separate them. You know what that means, of course? That means Monsanto lives again. As in some form as a public
CL
company.
below 49.27.
But yeah,
Has Michael Clayton been added to their board?
Michael Clayton is not one of the great news.
What was that about?
Tony Gilroy wrote that.
Then what was that exactly about?
Prop science.
Yeah, science.
It was.
George Clooney's best friend.
Such a,
You probably think Casamigos is
but we're talking. Bill Anderson. Again, you can have a quote like that when you're a new CEO. When you're a few years in and you got to own the fact that you didn't produce any cash flow, you're probably not putting a quote
Come
like
on,
that.
there we go. Yes, pick up some speed, baby.
That's a huge company.
It is a huge company and an important company. Thank you, Jim, because we don't talk about it as often.
No.
You can see it has not been. a
Come
good
on.
performance.
Oh, if this 15-minute candle closes as a reversal or a spinning top. Come on.
Guys, a couple other things on my radar.
Oh, do we know these?
No, Endeavor reported fine. TKL reported. Endeavor, what you're waiting for is, are they going to reach some sort of a deal with their largest shareholder? Silver Lake, remember 71% of the vote. This is going to be interesting because you can move quickly here, right? Maybe get something done as soon as before the end of the year, given there's only one buyer. They know the company extraordinarily well, but they're in. They're going to get Bottle maybe to come in. Ari may roll in. Shapiro might roll in. Some other shareholders, and so you do wonder if everybody's rolling in at one price, who's on the other side to argue for the highest price possible? They obviously will have a special committee. It's unclear to me whether they've hired a banker as yet. I think they're out there, but I don't believe. I might be one thing they've hired a banker. But they will very soon.
Nice bounce on Tesla so far at the 220 area. Nvidia, another pop. Apple,
You know, your CEO at 6%.
another pop. Jeez.
So how's that going to set up in terms of an argument? Will they at least
Meta's looking good for a 312 move, possibly 310. Microsoft. Okay, you in the highs. AMD. Goodness gracious.
I know, but governance will be important here to see how they structure this.
Ooh, yes. Bro, I hope you're not in NG.
Because they're gonna have some tough negotiating to do here with all these guys.
Huh?
You know, there'd been hope there'd be a 3 in front of it.
You've given great coverage on that because I
got nothing yet. I'm just talking about a process.
I was so trying to
Mm-hmm.
for heaven's sake.
It's like, come on with your bad self. Get back up there.
What did he say? How about thank you?
Ah, damn spy, damn spy.
Wasn't deserved.
Ooh, okay. Knee tie popping.
I want to talk about Robinhood first.
I was going to get you to Robinhood.
Okay, because Robinhood, most of their trading is either options or crypto. Okay, now they do have a very good IRA product. If you keep it for a while, they'll give you some match. But I felt that the quarter, frankly, was awful. And the reason I say that is because I know that they claim that they're really involved in education. They claim that they're really the organization that has pioneered inexpensive trading, not trading. But what they haven't pioneered is more growth. And growth is everything. And when you read the conference call once again,
Did JP say anything? No. Not. I mean, I joined. He did a quick introduction. Right now, you have a bunch of other people talking, so not really yet. So if he doesn't say nothing this morning, I'm pretty sure Weller or Barr are gonna say something. So every time that they've had a speech or an interview, it's either Powell or Weller that ends up saying something that causes the market to run or drop.
Obfuscation of CEOs who come on at the top of their calls and tell you everything is great, and you look at the stock and you say to yourself, who's right, who's wrong? And I find mostly the stocks have better armor.
MAU's down 16.
What is it?
It's really terrific.
Crypto revenue down 55.
That's Robinhood, right? Not Toast.
Robinhood.
Right?
Mhm.
Toast is toast. I don't have to worry about it.
And Vlad Tenev did talk about the stock price in particular. Take a listen.
Yep, and he speaks tomorrow, so that might be when we really see the action. Come on. I need NQ to go negative. I need all these 15-minute candles to close red.
But we're staying focused on things that are in our control, like growing our business and driving profits higher. Over the long term, we think this is the approach that'll move our share price up.
By comparison, Jefferson, Toast really just cut the top end of the guide.
Oh my God! See now, Toast. I was in the
I
restaurant
wonder
business
what
where
210 Tesla puts are looking like.
because of a three-tiered system that makes you sell called the Tide House rules.
Tesla,
Right after prohibition ended.
keep
When
going.
I was in this business trying to figure out
Options.
what happens? You'd have a point of sale system, and then
What are
someone
we
would come in
on?
and say, "What's your point of sale system?"
8.
You say, "Blah, blah, blah."
This
You say,
week.
"Okay, I'll give it to you for half." And I said, "But the last guy gave it to me for
November
half." So, well, it's a price war.
24.
Well, I mean, it's a price war. That you're not
Tesla
gonna win. You gotta
210s are going for $4.
Now, this is one of those quarters where you listen. They do have a lot of customers, Toast, but this is a lousy business. Point of sale is a lousy business. Why? Because it's there's no moat. I mean, honestly, I had point of sale at the caviar. So then suddenly, like DoorDash comes out, hey, everyone wants to be your register.
Hey man, it's a start. Something's better than nothing, my guy.
It's a lousy business when everyone wants to do your business. Lousy. And anyway, Intuit's going to take over the world because Intuit is the one that actually makes it so that you can optimize your workforce.
And file your taxes all at the same time.
Intuit is amazing. People do not understand the power of Intuit. They don't. Except, look at that stock. Now, there's a stock. You know why? Because you bring them in, you save money. You fire your accountants. You can understand your payroll.
And that's with the threat of the IRS doing their own.
Yep, I'm still holding ES shorts. I probably should have taken my 4 points profit, but I'm looking for a much bigger move. I'm risking about 10 points to make 15.
Speaking of not dynamite sports, guys, let's at least end here with Warner Brothers Discovery, Paramount. I just want to reiterate the stocks. Listen, the expectation in terms of some would say, well, nobody really anticipated they hit that year-end targets. CFO times adjusted EBITDA and his target at the end of 2024. That said, taking together the figures just mentioned, it's unlikely from today's perspective that we will hit our target leverage range by the end of 2024 without a meaningful recovery in advertising. That's what has taken the stock down. Many people say nobody really believed those leverage targets. Well, I don't know. Enough did. And then one analyst saying the conclusion is networks worse than expected, so management might feel
On ES, either I get stopped out or it comes down to my TP. If I get stopped out, I'll look to reshort it again later in the afternoon, because literally between 3 and 3:55 we end up having a nice 10-12 point drop from whatever the high point is, so I'll be waiting for that if I get stopped out this morning.
He'll be flying out of a plane without a parachute. Just figure it out.
Check this payback.
He does all his own stunts.
I watched it again.
Which one? The last one? The one that very few people watched.
Well, I tell you, that had the impact on Paramount that Barbie had.
Didn't help.
No.
Except Barbie was a real huge hit. Mission Impossible was disappointing at the box office.
My wife bought some Birkenstocks because of it. That's really the takeaway.
We got our comments from Powell. Didn't really comment on the economy or rates. Got a piece
No,
of
he
cook under
didn't.
our belt. We're going to get Williams,
Frankly,
Warren,
did
Jefferson this afternoon.
work for this, and I'm really grateful for that. It's to see all of you folks who I met.
You can join CBC's Your Money virtual event.
I mean, in some cases,
Some other
um,
financial experts on ways to
that means an awful lot to me. Maybe I'm just getting older, but he's bringing it.
This sounds just like this whatever conference they're having is just them. Seems like it's just for them to pat themselves on the back. It. ES new high. Massive divergence, Dow popping, ES not doing much. adding a position on the Forex side on ES short here, bringing my cost average up. There you go. Absolutely. Stick and move. Stick and move. Set an alert on Tesla if Tesla gets below 218. And then we want to see if we can get below 215 on Tesla as well. Alert. And below. Voila. Just a bit still. Now what we're gonna need to see is we're gonna need to see a close below yesterday's high on Dow. Once we get a candle close below that high, we can look to add or scale in short. Oof, what a push. This market is not 7 green days in a row. Yep. Bidenomics, my my rear end. But yeah, sheesh. Now the Dow is pulling, Nas is popping. Come on.
Stock might be substantially higher because we're getting some American Heart Association data about major adverse cardiovascular events that can be protected. Stop basically, man. When you see a select study which shows that there was a 20% reduction, the reason why this is important is that a lot of people feel what insurance company ought to pay for something that makes you look better or thin or whatever. You can't be too rich to be thin, but what I would take away is that this is about a heart drug. A lot of people are going to be able to say, a lot of doctors, a lot of cardiologists can put people on this after they see this data. So it does matter tremendously. I want people to be up on it and realize this is the next level for what I think will be the biggest sign.
What a year it's been.
Me, nah. I'm here, man. I'm waiting to see this thing freaking do this reversal, man. Like, come on, bruh. Give us a drop. 1, 2, 3, 4, 6, 7, 8. 8 freaking days of just non-stop buying. Like, stop with the bullshit, man. Get with the times. Let's go. Daily super overbought. So let's see. Daily stochastic and RSI overbought. 4 hour still massively overbought. Come on. 1 hour as well. 30 minutes. And 15.
Since its first quarter since coming.
First quarter, no, it's obviously it's more expensive than almost every semi other than Nvidia.
Yeah.
Even more expensive than AMD. But I do think
they got a fruit serving in that moment.
Yes, they do, and I'm thinking that they might do that. Now, look, NXP and people stop big and people cut.
Yeah, don't play with me.
Just like the
Oh, okay, let's go. Come on, I need you under 4,400.
Frankly, showing cracks.
Shit.
Or toast. Read through the first 5, 6, 7 grams of the gospel. Do not be
Come on. Oh.
Usually put the best stuff up high.
Nice wick rejection on the 15-minute time frame. Oh, there we go. Come on. Oh, let's go. Ooh, yes. I'm gonna try not to get too excited. I might take some profit at 44 even, and then look to rescale. Come on, baby. Come on, don't play with me. Just get under. We want 43.99. You're right there. We need follow through. NQ, another rejection at the yesterday's high. Well, slightly. It broke slightly by 5 points, but we need a solid close below 15,363. A nice solid 15-minute or 30-minute candle close below 15,363. We could start looking for more unwind down to 15,254. But this is gonna be a challenge. Downs with the bullshit. Come on. There you go. Give me 4,400. Let's go. Yes, come on, come on. Let's go. Do it. Come on, bro. Now. Give me 4,400. Yeah. Don't be shy to take profits, guys. If any of you guys got in at the 44.05 or 44.06, look to lock in some profits. Don't be shy. Something is better than nothing. Come on. There we go. Come on. Give me 44. All right. All right. All right. Took partials. Took partials. Let's go. Yes, baby. There we go. Ah, yes, yes, yes. Let's go. Thank you. Thought they were gonna hold us hostage all morning. Let's go. All right. If you haven't taken profits, consider taking profits. I've locked in half. I'm looking to move my stop loss to in profit. So I'll probably put my stop loss at 44.02 on my runner. Yes. Yep. Good stuff. Good stuff. Good stuff. Good. You go, girl. You go. Do your thing. Ooh, look at NQ. Yes, baby. How are ya? Locking some profits on NQ. Uh-huh. Yeah. Y'all see how my mood changes? You know what I'm saying? Once we start getting some volume and things start acting right, let's go. Let's go.
January of last year, and definitely something to pay attention to. As sales ramp up, we want to see these inventory levels, which really have been on the low side, start to come back a bit. We know that there was post-COVID
I want
issues with
43.90. 43.90. Give me 43.90 and I'm calling it a day.
Wearing down inventory.
Let's
Look
go.
for some of those numbers to potentially kick up a
Bring
bit.
your ass
And
down.
as for yields,
Bring your
2 and 3 year note
down.
yields are slightly higher than yesterday. The rest of the curve is lower. So we're seeing more inversion in the yield curve. And if we're on pace at current levels of a 10-year note yield at 4.55 to be the lowest yield close since the last week in September. Carl, back to you.
Rick, thanks very much. Meantime, S&P Nasdaq seeing their longest win streak since November of 21, as you may know by now. But can that rally continue? Our senior markets commentator Mike Santoli joins us with his take this morning. Is the year-end playbook playing out?
It's part of the story, but also it just sort of shows you what set up this win streak, which is a 3-month losing streak in the S&P 500. The first one we had in 3.5 years. So you have a little bit of that equal and opposite reaction. We're unwinding some of the extreme negative positioning and short selling and I think just underexposure to stocks and pessimism that we had coming into this period. But there is a little bit of a quirk into how we're continuing this streak this week, which is doing just enough with the large cap stocks to get the S&P 500 into the green each of the last couple of days. So it's not necessarily that salient that we have this streak, but it is showing you the market is allowing the average stock to kind of settle back a little bit and cool off. after that big sprint higher last
There
week,
we go.
while in
There
general
we go.
not really
Yes,
doing much
yes,
damage
yes,
to the
yes,
indexes.
yes.
So it's kind of what we had to do is to kind of have some digestion of those
Mhm.
gains. We're getting it. We're obviously past peak earnings season. It seems like an earnings season we have to kind of weather through more than just actually celebrate in terms of market reaction.
Dow Jones is
And
now
to me, that is the
below
setup, and it really has
yesterday's
exacerbated
high.
the debate that's been going on forever of, is it just a handful of stocks that matter right
Come
here?
on, yes,
Microsoft
yes, yes.
all-time
We are
high.
5 points
Microsoft
away
actually now the largest
from
weight
my
in the
overall
S&P
TP
500
on
funds
ES
because of the
short.
float adjustment to
I am
Apple's
going to move my stop loss to
the way to think about this
4,400
is,
even. That way I
S&P
walk
only
away with
considers
at
the freely
least
floating
5
shares
points
in
on the
their
runner.
weighting in the index, which is why, for example, Walmart should be like the 15th biggest stock in the S&P. It's the 30th biggest because the family still owns so much.
What is it with Apple? Who's the big
Berkshire
owner? Is it
Hathaway owns
Berkshire
almost
is considered,
6%.
and that's considered not
As far as I can tell, the rules are if another publicly traded company has a position, reported position, it gets counted against it. They own 170 billion shares. I believe that's the
$170 billion
reason.
worth. Yeah, sorry. But I didn't know that, Mike. That doesn't count
It's a
as part of the free
quarter,
float. So the weighting now is just to make this clear.
They're
Microsoft
neck and
is
neck, but Microsoft is
where are they
basis
both around
points
7?
7.3, 7.2,
Okay, so combined 15.
14.5%.
Thank you.
Total. You know, it's also the case that Apple bought back 3% of its public shares last year, in the last fiscal year. So all that stuff works against it. But if you look over 2 years, the NASDAQ 100 relative to the equal weighted S&P 500, or at least since the NASDAQ peaked in late 2021, there you go. What looks out of whack about that, right? In terms of point to point. Yeah, sure, equal weight's lower, it's 5 percentage points. But last year, the 7 stocks that everyone is saying is the whole market this year accounted for $5 trillion of market cap loss peak to trough. While the overall S&P
Don't
was
take
down
any
10
more
trillion.
trades. If you
Nobody was
up,
saying at
listen,
that point,
anyone that got in at 44.05, you just snagged almost 10 points. Don't be greedy. We already know this market's acting up. We up. No need to push the envelope. Obviously, again, if you have other stuff to do, you don't want to necessarily be you don't necessarily want to be over trading. So let's see. We'll put 44.
It's a matter of the quality factor has been the best performing characteristic of stock this year. Better than momentum, better than value, better even than just pure growth. Quality. So everyone's going to balance sheet strength.
Yes. We up. We up.
Things that you would say these are
I mean,
profitable companies for the long term.
not fully following through, but it's so good. We'll take it.
What you would expect off of a really good correction low, if we got that last week, is high beta stuff, aggressive stuff, riskier stuff outperforming. That's not really been the case. It has really quickly migrated toward,
I'm done with this Fed nonsense, whatever.
They're cheaper than they were, almost 2 years ago at the peak. They're not cheap, but they're cheaper. And I think that's as much of the story as we can tell.
More selling. I mean, we could. This 15-minute candle is a beautiful bearish engulfing candle. If I zoom into the 1 hour time frame, and we can see 1 hour time frame, beautiful 1 hour bullet bearish engulfing candle. Question is, let's see if this 1 hour really closes like that. If it does, great. This 15-minute candle, as long as it closes below 4,400, we can look for a continuation. So let us see. I'm tempted I might re-add. Should I?
Metrics from the quarter that are pressuring the stock, or was it the specifics of what was said by the CFO during the call that we just shared?
I absolutely believe it was what the CFO said during the call. His comments that were really forward-looking about the company's pace of
Order filled.
leverage at the business. That reduction of
I'm
leverage
adding
really
back
to the way
like
investors
this.
think about the equity value here. It's kind of viewed as I don't want to call it bulletproof per se, but a real reason to be involved in the stock, even though we know that there are secular challenges. So when we hear that those secular pressures are weighing even more heavily on that.
It's all right, man. Listen, you're up on a day, so yeah, take a step, man. Go do something else. If I could kick you out, I'd kick you out myself. But nah, I'll catch you tomorrow. Yeah, tomorrow's Thursday.
And meanwhile, the stock is down 15%. So I'm just curious, as somebody who's been relatively positive on the name as well, what's your take here?
Sure. Well, historically, we've had concerns about the ecosystem in this company as well.
The
And we did run into
reversals be
buy last
so
year, really looking at a couple
disrespectful.
of critical components. One, we do think they have a great collection of assets between Warner Brothers,
Huh?
HBO, CNN.
Bro, it's like, can you just stay down there? Like, break and, bro. So I be over here struggling. I'm like, yo, should I take profits? Should I not?
Digital players are starting to see some re-acceleration in the back half of the year. So we published a note on it, even following what we heard from the company today, expressing some of this incremental concern that we have toward the future of the business.
Yeah, you point out the strike. You think the street basically understands, but it's the advertising commentary that took some by surprise.
Yeah, absolutely. I mean, if you think about it, everybody understands that the strike is a challenge for the business. There are some uncertainties around, one, the timing of the strike being resolved, and two, what the outcome of these strikes will mean for future expenses, levels of content spending, etc. Pretty consistent across all the companies. So we're not making decisions on one stock versus another. That narrative, I think that's digested. But when we're talking about starting to lap already challenging equivalent declines going forward. In addition, we didn't mention this before in this conversation, but the company did talk about leaning into some incremental investment going forward. And that's fine. Long-term investors like investing on the back of strong IP, but that was really a surprise given that we still don't seem to be past the synergy study part of the story yet to be talking about incremental investment.
The networks business seems to be a real concern. I mean, you pointed out it's even declining more quickly than even those who are pessimistic might have expected. Not sure what that means for Paramount or even for my parent company, Comcast, as well.
Yeah, well, I mean, it matters a lot, and we're looking for data points. And I guess I'd say a couple of things. Number one,
There you go.
from linear businesses,
Drop your cell phone down.
this is another topic that I would describe as completely understood by investors. However, the pace of the declines in the lower multiple traditional business and the rate of growth in the new business, the streaming business, those are uncertainties. And when we look on a consolidated basis, which is what we advise investors to do, what we're seeing is that even though you're seeing big percentage growth numbers in digital, the dollars are still relatively small compared to the compression. And until we start to see kind of what I would consider either a stability in the linear declines or a sort of supercharging in that digital rate, which is a competitive environment, we continue to kind of incrementally take our numbers down, and that's an issue.
All right, all of which sets up for Disney after the bell. Is there any takeaway from what we've all been talking about specific to WBD? And what are you going to be looking for and listening to on the call as well when Disney reports?
Sure. Well, Disney, I would say there's a similar component and there's a different component. Okay, so I'll talk about each. On the similar component, Disney is very much in the thick of this movement from a linear world to a digital world, whether it's ESPN, ABC, or some of their entertainment assets that we saw through a new distribution agreement they did with Charter this year, which moves some content from the linear world to the streaming world. So Disney is navigating that, and they're likely to need to talk about some of these challenges that we've seen in other companies. At the same time, Disney, as we know, has unique assets, and the company has been under a lot of pressure over the last 1 to 2 years.
All right, so just to re-add, ladies and gentlemen, if ES can close below the Asian low of 43.87, any retest of that area or 43.90 is going to be a nice solid short. We need a full breakdown of this higher low, and then we need at least one or two lower highs and lower lows below 43.87. Once we have two lows below 43.87, we can consider that a break in structure to where now the shift from bullish to bearish will occur.
Also be talking to Chris Chris Winfrey, we just mentioned Charter and Disney. His first interview since that agreement was struck as the CEO of Charter, and Jennifer Woods from Series.
Meantime, a lot of news in the EV space. Rivian and Lucid moving in opposite directions. At least at the open, Fisker did hit some all-time lows. Our Phil LeBeau's tracking some of the action. A lot of this, Phil, revolves around production guides.
It's production guidance, and with regard to Fisker, it's pushing off
Get
your
yourself
earnings
down there,
this
baby.
morning, doing it next Monday, and leaving a lot of people going, what's going on here? Let's start first with Rivian and the company doing better than expected when they reported their results.
Order filled.
Yesterday. A couple of things stand
Let's
out.
go. Taking the ad
Narrower than expected loss in the third quarter, and they are lowering, continuing to lower
off.
the loss
Let's
per vehicle,
go.
every vehicle that they make. Here is CEO RJ Scaringe on Squawk Box this morning.
Like, who wants to
The
smoke?
vast majority of our customers are coming out of internal combustion vehicles. On the order of 80% of our customers have never owned an EV before. So it's really exciting as a brand to be essentially the pathway or the gateway into electrification for a lot of customers.
Overall, a very positive report from Rivian, though it's not being reflected in the shares right now. Also, take a look at shares of Lucid. Their 2023 production, they have cut it. It was going to be 10,000 vehicles this year. Now they're bringing it down to a range to between 8 and 8,500 vehicles that will be built this year. And finally, take a look at shares of Fisker. As I mentioned, the company was scheduled to report its Q3 results this morning. Then a couple of hours before the results were coming out, or supposed to come out, they sent out a note saying, you know what, we got a transition at CFO that's happened over the last couple of weeks. We're going to push this off to Monday. You don't see that happen very often, guys, that you get results pushed off at the last minute to a couple of days later. We'll see what they have to say on Monday. And don't forget, guys, you've got the UAW president, Sean Fain, meeting with President Biden in Illinois tomorrow. Tonight on Last Call, Sean Fain will be on. We'll see what he has to say. You know what the story is. They believe that they can unionize foreign automakers who have plants in this country as well as Tesla.
Yeah, we won this round, as he said the other day. Phil, on Rivian, we had this discussion with Jim earlier today. The ability to
30-minute bearish engulfing candle. Come on. 15-minute close as a bearish engulfing candle. Let's see if we continue.
EV market, separate from what Tesla is doing with retail vehicles, electric vehicles. The part of the market that's really going to be hot and is already percolating is commercial vehicles. And so if they can go beyond Amazon, which they now can, it opens up a world of possibilities for Rivian. Now, they haven't said what other vehicles they might start rolling out or other customers, but that is a market. The commercial market is chomping at the bit to go electric.
Speaking, we're taking a look at that stock price. I mean, you spoke to this a moment ago, Phil. Any idea why it is not reacting positively? It did appear to be in the pre-market, certainly, to what, again, as you've characterized it, was a positive quarter. Was anything said or just give me some take here.
There was nothing specific, David. There is the same general question that is out there. You are improving. If you were Rivian, you are improving over the last several quarters. This sets up 2024. You really have to show the progress in 24, and there's going to be some production transitions between Q2 and Q3 of next year. We're not going to go into minutia of what's happening there, but it has a lot of people saying, can you accelerate what you've done in 23 in 24, and is the path to profitability a true path there? Those questions are still out there.
Phil, thanks. Man, so much going on. We didn't even mention GM Cruise. Maybe later on today, Phil. Thanks. Phil, about busy day. Let's get out to our Sarah Eisen, live at the Women's Forum of New York's Breakfast of Corporate Champions, with some big interviews this morning. Hey, Sarah.
Hi, good morning, Carl and David. And yes, that's the reason I'm not with you. I just stepped off stage here at the Women's Forum Breakfast of Corporate Champions. It's an event that recognizes companies that have at least 40% representation of women on their boards. And I'm going to bring you interviews with two heavyweights that were just on stage with me. The CEO of Progressive Corporation, Tricia Griffith, first time on CNBC. She oversees the almost $100 billion insurance giant. And coming up after the break, you will hear from Karen Lynch, the CEO of CVS Health. She's got her pulse on the consumer economy and the healthcare economy as well. Both of those exclusives coming up for you on Squawk on the Street. We'll be right back.
Ooh, go girl, go. Oh, beautiful. Beautiful. Huh? You just went short MQ? Nice. Welcome to the party. Go, baby, go, baby, go. Go, 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 go. Ooh, yes. Come on. Let's go. Such, yo, this 30-minute time frame, bro, is looking so sexy. Let me show y'all. Let's go to 30-minute time frame. Look at this beautiful volume bearish engulfing candle. We get a second one closing below this. Please, this be the high. This will be the high. We have jobless claims tomorrow. Powell is speaking tomorrow. Please let this be that perfect storm. Need another black swan event and crash this market. I know people be like, yo, what's wrong with you? Why do you want the market to drop? Because I'm short.
Corporate champions, one of those champions is Karen
Huh?
Lynch. She's the CEO of CVS Health. It's good to talk to you.
Oh yeah, bro. That's what I'm saying. I gotta buy wish list. Like I got a list of stocks I want to buy, but I need this thing to drop like a bag of rocks. Hell yeah, we do.
Very strong quarter, 221 EPS guidance, beat consensus, $90 billion in revenue, which was 11% growth on a year-over-year basis. Exceptionally strong cash flows. We generated $16.1 billion.
Order filled. Okay, short NQ at 15,357. Let's see if we can get a drop down to 15,285. We need to make a new low.
What about in the retail pharmacy business? Because everyone's trying to figure out what's going on with the consumer right now. What do you see?
Yeah, so what I would say about the consumer is acting with some caution, but we're not seeing a dramatic change in consumer behaviors pre-pandemic to now. So what we've seen is we've taken share in our pharmacy business, and our front store sales are flat, excluding kind of things that people were buying for COVID. So, consumer caution, but still seeing normalize coming into this year.
Is theft a big issue for you?
Theft is a really big issue for us. We've taken many actions to protect our colleagues because people are coming in just taking things off the shelf and running out the door.
What's the solution to this?
Well, I think it's a big solution is we're working with attorney generals, we're working with local law enforcement, that it really has to be prosecution. And there's been some lax in that, and we've been working really closely to really fight and combat for prosecution of those individuals that are in our stores stealing things.
Well, you're not alone on that front. We hear it from a lot of the retailers. You mentioned the PBM business. I think that and how results there are good. The constant worry, I think, from investors is that this is going to be under regulatory pressure, political pressure. It's become sort of a political punching bag. What do you expect on that front?
Well, it's a really good question. Thanks for asking. First of all, I think the PBM is one of the most misunderstood businesses that we have.
See benefits manager, like the middleman.
Exactly. And really what we are the only one in the value chain that our whole sole purpose is to reduce pharmacy spending. And we have demonstrated that time and time again. We've kept pharmacy trend relatively flat. Our business, continues to innovate. And from a regulatory standpoint, what we expect to see is transparency. And I think that with transparency, we already do that. So we anticipate much many issues with our business if, you know, if anything passes this year, and that's yet to be seen.
Okay, so not a big headwind. You also, is there really a role to play there when it comes to the obesity drugs, the Ozempics?
There's a big role for
That's
us.
where all the growth is in your space right now.
It really is. And I think if you step back and you look at GLP-1s, the obesity drugs, that's what we call them, they are proven to, you know, help with reduction in weight, to help with individuals with diabetes. The problem is they're incredibly expensive. And so, you know, I said this on our earnings call, if all Americans that are considered were obese, and were prescribed a GLP-1, it would be $1.3 trillion of healthcare spend. So our job is to really figure out how to reduce that overall spend, and that's exactly what our PBM does.
Nice.
And
Keep
we
it
are
going.
creating
NQ. Go, baby. Go, go.
When does that materialize?
Bro, you don't know how much of a breath of fresh air like I'm breathing right now. Like, yo, this thing is finally, bro. Oh, man, I really do hope this is the high. I really hope it is. Because if it is, man, we know the downside target, man. 41.36. Oof. If it can unwind this by the end of the month, bro, ooh, can we say 100 bands?
Technology, and we're continuing to hire in those spaces.
We've seen some store closures.
Come
More
on.
to come?
Yeah, 2 years ago, we announced that we'd be closing 900 stores. We closed over 550 stores at this point. We will be at the end of next year.
Let's
We'll
go
have
back
closed
to the
all 900
15.
stores. And what we've been doing, we've
back
been
for me.
keeping our colleagues. We've had over 95% retention of our colleagues, and we've also had, you know, a shift from those stores. From our front store and our pharmacy, we've had 75 to 80% retention there as well. So good, solid results.
What about consumers and those that are worried about pharmacy deserts, not having access to critical drugs and healthcare services? Right, competitor of yours, Rite Aid, recently filed for bankruptcy. It's shrinking.
Yeah, we have been very deliberate in where we reduced our stores. We made a conscious decision that we would not create pharmacy deserts, and because we know that sometimes CVS is the only place where people can go for their pharmacy, for their meds, and for food sometimes. So we were very deliberate in our focus on where we would close stores. It was more of a density, where, as you know, there's on every corner we have CVS's, so we're kind of reducing some of that.
New York City, we have a lot of them.
Yes, we do.
What about the walkouts that we've seen from
Go,
pharmacists?
go. We need this break, bro. We break 43.90. Come on. Let's go. We just sit back and collect. Come on. Drop. Oh my God. The first red day. Please let it be the first red day. Oh.
Technology to support our pharmacy and pharmacy tech so that we can improve their workflows, improve their
ES, we need ES to close below. Today's ES has to close below 43.87. Any close below 43.87 and we are, I'm gonna take a shot and say we are good.
We had very few, and we closed no stores, and we had no disruption.
And if we can get below 43.60, even better.
Thank you so much for taking the time to talk through some of these big issues.
Thank you.
Appreciate it.
Nice to see you again.
Too.
Thank you.
CVS Health. Carl, back over to you.
Forward to it, Sarah. We'll see in a bit. That's our Sarah Eisen. Coming up after the break, a lot of consumer-facing
I got 7 deep on the swing account, bro.
Feature some of the names you need to be watching in today's trading as we've lost some of the opening gains back below 43.
You need to give it all up. All up. You heard? 30 minutes till London close. What the? Yeah, you're kidding me. Give me a second.
Dominic Hughes. Stocks are moving between gains and losses so far this morning. Consumer-related names reporting earnings earlier today. We'll start with Ralph Lauren, which reported better than expected profits and revenues. The clothing retailer was helped along by sales growth in both Europe and Asia that helped offset some modest declines in North America. So Ralph Lauren shares up 2.5%. Turning to recently public Cava, which is trading lower despite reporting better than expected revenues. The fast casual Mediterranean restaurant chain saw a 14% increase in its sales at its restaurants, fueled by both higher guest traffic and price increases. Nonetheless, those shares down 8%. And then Kellanova, the company formerly known as Kellogg, is higher after beating sales and profit estimates. It's the first report since the company completed its spin-off of its cereal business, WK Kellogg, last month. The maker of snacks like Pringles and Cheez-Its saw volumes decline during the quarter, but price increases helped fuel some profit margin growth. Those shares up nearly 3%, David. I'll send things back downtown to you folks at the New York Stock Exchange.
Yeah, for what has not been a good move, obviously, since really the announcement of the split, including it, Tom. Thank you. Still ahead, Microsoft hitting all-time highs. The stock's up more than 6% just this month, and now up more than 50% for the year. But, of course, the question you're all asking, how much higher could it go from here? We're back in
stocks up more than 6% this month alone, now up 50 on the year. Jeffries Brent Thill joins us this morning.
I'm all out.
Brent, it's good to have you.
No positions right now. I am looking to potentially re-enter, but I'm all out.
Excitement is a huge driver coming out from Microsoft. It's one of the best life cycles that we've seen at the company for a long time. You have to go back to Azure, look at that cycle. I think the stability of the core business, the quality of this management team is exceptional. It's the best management team in software. As we've said, there's 2 co-pilots you want to fly with, or you could Satya and Don. So we think, a combination of the product side called pricing power. One executive that's at a very large company told me they effectively doubled our price for our office seats going forward. When you think about what that means, it's incredibly generative to their revenue into the next year. And they've said that they can do this AI without really damaging their core margins. So you have an accelerating revenue growth story, sustaining 10+% top line on a $200 billion plus run rate, with margins that aren't flying out of the sky because of all the investments they're making, so they can recoup this. And then the combination of their durable, diverse model, which is from infrastructure applications to productivity tools. It's hard to get off the story because of the quality in every nook and cranny of the business.
Yeah, it's interesting. Of course, it was the announcement of the pricing back in July that marked the high for the stock. We've now filled that gap. How durable is your target, do you think? And does momentum take over?
We have a $400 price target, but you're looking at a company that's going to generate $15 of earnings power. You keep a 30 multiple on that, you're at $450 on the stock. And then right now, no one really knows exactly what the AI movement's going to do. Microsoft has said this repeatedly. They're not exactly sure what's going to happen. And so there are a lot of bullish scenarios where you can generate, between 30 to $50 billion of incremental value in these new products. And again, it's way too early to make this call, but all the what ifs, just in one product line, which is Office, we can get to $15 to $20 billion of incremental revenue in one area. Remember, all the big pillars are going to have an AI co-pilot, which they're going to charge more. Security, Azure, applications, Office. I mean, and again, remember, if you look at these big tectonic shifts in tech, there's one vendor that really captures the most of it. And NVIDIA caught that in semis. We think Microsoft's going to capture this in software. Remember, software hasn't captured yet because all these services aren't fully live. Less than 50% of Microsoft's AI services are live. But as we go to 24, they're all live. And that's going to create a huge...
24 is around the corner. So what data points are you going to be looking at to judge whether they are making the progress you expect they will when it comes to these generative AI products, obviously led by Copilot?
Well, right now we're starting to get early evidence of big companies committing to this. Initially on AI, we thought it'd be a small out of the gate, everyone would take baby steps. We're hearing major companies taking massive steps, 10 to 20,000 seat count deployments. That was not originally in our model. The ROI studies we still have yet to get fully, but I think time back to productivity gain in your day has been the common theme. So the things we're looking for are just the feedback from the customers that are now implementing these products. Again, all this has been canned demos, all this has been in PowerPoint, if you will, and now we're into, okay, live in the field. So now we're in the field talking to customers. Our own firm, Jeffries, is deploying this in a little bit. It hasn't fully rolled out. We're not getting all the seats we want. We're getting idle. So there are many companies today that want this service that can't get it. And so that's another example of, I think, right now, the demand is outstripping the supply, and that's a good thing for Microsoft.
Pretty amazing, Brent. Well, we're going to get a lot more information, obviously, about the product in the coming quarters. Brent Thill, thanks very much, Mr. Softy. After the break, a rare and exclusive interview with the CEO of Progressive, what she's seeing when it comes to growth in the insurance business and the big impact of climate change and how they're dealing with that in a moment.
Independent Media.
I'm on
Hello,
mute.
Maffei, Winfrey, and Wits.
There you go.
All
There
joining
we
me
go.
from Liberty's
Drop it
Investor
like a
Day.
hot
That does it
potato,
for this hour of Squawk on
baby.
the Street. Another big hour coming your way right for this.
Go. Ooh, 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 ooh. Got me out here praying to the trading gods, like, let this be the top. It's like, bro, just break it down. Break it down. All right, ladies and gentlemen, that is going to be it for me today. Thank you very much for joining. Those of you guys that are green, do not overtrade. I'm going to stress this. Do not overtrade. Keep your profits unless we get a solid pop, maybe a pop to reject 4400 or 4403. Keep the tight, your stop losses tight. Trade the micros, if anything, just to be able to better manage the position, and don't overtrade. If your daily goal has been reached, walk away, come back tomorrow. All right. Thank you. Another good day. Yep. See you guys tomorrow. Going to hop off. Yes, gym session. All right. So I'll catch you guys tomorrow, right? Peace.